Welcome back, guys. So in this video, I'm breaking down market structure for beginners and advanced traders, right? So you will learn everything you need to know about market structure in technical analysis, whether you trade crypto or forex. So yeah, let's get it started. Okay, there are a few things to know about market structure, right? So market structure tells us the direction of the market. Now this is very important because when you trade the market, it is very important to always trade in line with the direction of the market. So, for instance, if the market is bullish or buying, it is wise to buy alongside the market. If the market is selling, it is also appropriate to sell. Yeah. So, market structure would tell you an insufficient knowledge of market structure might put you in a position where you are trading against the trend, right? So yeah. So market structure will give you a good insight on market structure, gives you a proper positioning for the market, and it also shows us possible areas where this is very important, where price will react from. Yeah, so market structure will tell you where price is coming from and where price is going to. Most persons take trades emotionally or based on like they are gambling, but you see, proper market structure knowledge will tell you where the price is coming from and where price is most likely react from, right? So, and then it also helps us to know when to avoid the market. Yeah, not doing anything is also a trading strategy. So market structure will tell you when not to trade, when to just stay off the market until when there is a proper trading opportunity. Okay, so three things to note about market structure. We have a ranging market, we have a trending market, and we have a trend line breakout. So I think these are three concepts we are going to work with. For a ranging market, this is just a rough sketch of what a ranging market looks like before we go to the live charts. The market is neither printing highs nor lows. It's just ranging. What that means is, okay, if I do this, you cannot know what the market is doing. The market is either buying or it is selling. So it's just ranging, right? So it's sometimes producing equal high or equal low. But basically it's moving within a range. So this is called a ranging market. And it's advisable for beginners, most especially, to always avoid to trade this kind of market because there's no specific direction. The market don't have a specific direction. But the truth is, if you look at this on a real chart, a ranging market is very, very choppy sometimes. It's just random. You see it up, down, up, down. You cannot tell if the market is either buying or selling. You cannot tell who is in control of the market, whether buyers or sellers. Okay, so we are going to be considering a trending market. Now, clearly look at this is a bullish trending market, right? The reason this is bullish trending is because it's producing higher highs and higher lows. Higher highs and higher lows. Look at this. The last high, this is the high. This high. Then the next high broke above this high. So we call this is a high, this is a higher high, this is a higher high, this is a higher low because this low fails to take out this low. This is a low here. This low fails to take out this low. So this is a higher low. The next high takes out this high. This is a higher high. This high takes out this high, placed above this high. A clear break of structure. This is called break of structure. Breaks above and close above this high. This is called a break of structure, or for short BOS, break of structure. This is called a break of structure. This is called a break of structure, right? So when we have a break of structure above here, then we have another break of structure here. We have another break of structure here. So this is another high, another higher high. So long the market keeps printing higher highs and higher lows, we call it a bullish trending market. Bullish trend is on a bullish trend. See the low too. This low is high. This low fails to close below or take out this low. This low fails to take out this low. It closes before this low. So we call this higher low. So this is called a higher low because it fails to close below this low. The moment this low closes below this low, the last low, is what we call market structure shift or change of character. But we are going to consider that when we start talking about trend break, trend line breakout. When we start considering trend line breakout, we'll consider that. So yeah, this last low, every last low is known as a protected low. What that means is we do not expect this low to take out this low. This low, when this low is a protected low because we don't expect this to take out this. This is a protected low because we don't expect the last low here to take out this low. So that is that for a bullish trend. So now we're going to consider the bearish trend, but the bearish trend is just direct opposite of the bullish trend. Okay. This is a bearish trending market, right? I explained what this means already. Bearish means the market is selling. Bullish means it's buying, going up. In a layman's understanding, bearish means it's going down. Bullish means it's going up. It's always the colors you see here. It's always represented with the green and the red color. So when you see green color, it means bullish. The red color, bearish. So yeah. Now for the bearish is just a direct opposite, like I said, of the bullish market, right? So for the bearish market, it's producing lower highs and lower lows. Lower highs and lower lows. That means this high. You see this high here? Then the next high fails to close above this high. Closes here, right? This high fails to close above this high. So this is called, this is a high, this is a lower high. This is a okay, this is a lower high. This is another lower high. This is another lower high. So the market keeps printing lower highs, lower highs, lower highs. This high fails to break above this high, fails to break above this high. This high fails to break above this high. This high fails to break above this high. So long the market keeps producing lower highs, is still on a bearish trend. Now look at the lows. It's producing lower lows. So this low is lower than this low. This low breaks below this low. This is lower lows. This is another lower low. This is another lower low. So long the market keeps printing lower lows, This low is lower than this. This low is lower. So it's just the direct opposite of the other. And we can also call this a bearish break of structure. Break of structure, BOS. A bearish break of structure. So it's breaking structure in the bearish direction. This is a break of structure here. This is another break of structure here because it broke below this low. This is another break of structure here, right? So this is right. So long we keep having break of structure to the downside, we are still on a bearish trend, right? So this is another break of structure here. This level, this low, this broke below this low, so we still have a bearish break of structure. This is another here. This level broke below this low. So long we keep having break of structure to the downside, we are still on a bearish trend. But now look at this. If I do this, this is our last high. So this is a protected high. So we don't expect price to take out this high. Now, what if something like this happens? Something like instead of this high to just go here and drop down, but instead it takes out this high. Something like this happens. This will bring me to the next segment, which is trend line breakout, or a shift, a change of character, or a shift in market structure, right? So yeah, a shift in market structure. Okay, welcome back, guys. So now I'm going to explain trendline breakout in details. Now, whenever the market is moving in a particular direction, maybe bullish or bearish, right? So it normally move in a sequence, right? In a sequence. That sequence is what we refer to as trend line. So we expect the market to respect, since this market is bullish, right? Clearly you can see that this market is bullish because it's giving us a higher high and a higher low. So this line here is a trend line. This is a trend line. So what that means is I do not expect this low to break out or go below this level. I don't expect this level to be taken out. I don't expect this level to be taken out. Okay, so I don't expect this level to get taken out. But then what if something like this happens? What if you see the market do something like this? Push beyond this trend line. Now what this means is this trend is coming to an end. Yes, this trend is about to come to an end or is coming to an end. But there are times where the market is very volatile. We might have something like this, then it will go back up, then the trend is going to continue being bullish, right? Now that's in some scenarios. That's why when you are analyzing the market, you have to be very patient to know what the market is doing at the moment, right? But there are also times where something like this happens. Something like this will happen. It breaks below this level, then comes back, tests this place as a resistance, then it starts coming, it breaks below, it breaks let's count this, it breaks below this level, comes back, tests this as resistance, comes back again, take out this low, then it starts creating another downtrend. This is, you see this across market peers. This is very regular in the market, right? So we are going to open a live chat now, so we start analyzing from bullish to bearish to trend line. Let's see what they look like on a live chart. Okay, right. This is gold on the 4 hour time frame, right? So if I do this, so by me looking at this chart, what can you see here? I'll give you okay, if you guess bullish, that means you're right. So from here to here, the market was actually bullish. The market was actually bullish from this point to this point. The reason is because it's giving us higher high and a higher low, a higher high and a higher low, a higher high here and a higher low here. Then we have another higher high here. Now look at what I was saying. The market came and broke out of this trend line, went back to test it, right? Okay, so it came back, test this resistance, pull back, came back again, test the resistance here. Then we saw that the trend changes to a bearish trend. It started dropping. Now I want to say something very important. In fact, this can literally improve your trading significantly. Now, anytime there is a trend line breakout, any point of interest that is at a trend line level automatically becomes a trend line liquidity. When there is a trend line breakout, don't try to buy. For instance, this trend line, this broke out here, right? There is a test. They say once there's a trend line breakout and retest, don't try to buy around. Don't try to buy around this trend line. Any point of interest around here automatically becomes a trend line liquidity. So once there's a trend line breakout, either bullish or bearish, any point of interest around that trend line area automatically becomes a trend line liquidity. What that means is the market is going to take it out. For instance, somebody might look at this and say, okay, maybe there's a point of interest around this area, right? Then maybe take this level as inducements, for instance. Now clearly you can see how the market just took it out straight up. No, and just took it out because any point of interest that aligns with a trend line automatically becomes a trend line liquidity. The market is definitely going to take it out. So if you're looking for a point of interest, if you want to trade market, for instance, and maybe I want to buy, I should be looking for anything below. I should be targeting any level below this level before I would think of buying. It should be at least below this level, whether for bullish or for bearish trend. It should be outside that trend line level. So from here, from this point to this point, the only thing I want to do is to sell. The only thing I will be doing from this point, if I'm going to trade this market, to this point is just selling. The moment you try to buy from any of these point of interest, there is a 85% chances that when you are trading from a trend line liquidity, the market is going to take you out. So many people say the market manipulates them or whatever. The market did not manipulate you. You are just buying or selling from a trend line liquidity. This is going to help you a whole lot in your trading journey. Okay, so having said that, I hope you get what that trend line, how important a trend line is to technical analysis. Now, having said that, I want us to look at this. Let's analyze this downtrend and see. Now, this is a higher high. This is a lower high, rather. This is a lower high. This is a this is a lower low here. This is a lower high here, rather. This is another lower high and a lower low. This is another lower high. Then we have this lower low here. So this is a bearish trend. This is a bullish trend. Then we have our breakout and retest around this area, right? This is a bearish trend. This is a bullish trend because we have higher highs and higher lows. This is a bearish trend because we have lower highs and lower lows. We have lower highs, lower high, lower high, lower high, and we have lower lows here. Now this is what market structure entails, especially for beginners traders. And I think this video will even be necessary for beginners and for even advanced traders. If you find this video helpful, like, comment, share, support my channel. If you're watching from YouTube or from whatever social media platform, I will appreciate your
engagement to this channel. Comment, tell me the next thing you want me to talk about, whatever you want me to share, you want me to explain. Just let me know in the comment section, and I'm going to create a video on that. Turn on notification so that you get notification of my videos when next I post. So see you guys in the next video.